Hello value investors, welcome. In today's video, I'm going to talk to you about whether it's a good time to invest in the stock market. If you're first time to the channel, please subscribe now so you can get my next video installment. So let's get started. Is right now a good time for you to buy stock? In 2020, we're facing a global recession, a severe financial crisis. So, is now a good time to invest? The short answer, in my opinion, is yes. The reason being that if you read Warren Buffett's 2020 letter, you will see him speak about the parable of when Graham said to him that this is not a good time to invest in the 1950s because the market is too high. So what does this mean for today? It does not mean that the market is going to go straight up. In fact, the market may even go below the March 23 lows. That was the point in 2020 that the market was the most severely afraid of all the uncertainty. So I don't know where the market's going to go. It very may well could go below that point. There's no reason for it to be as high as it is right now. So there's been a rally, but what does that mean? Like, is that the Fed pumping money? Is that people with fear of missing out? So I have absolutely no idea where the market's going to be in the next 6 months or the next year. And if you read what Buffett is saying, he's saying that you have to be selective. Now is the time to be selective, not to go into all those kind of highly valued stocks. How do you know if the stock is highly valued? I have a video, a quick shortcut for you to find out what the stock is trading at. You just look at its earnings. And for example, if the stock is trading at 20 times earnings, that means for $1 of earnings, you're going to be paying $20. So if you divide 1 by 20, you get approximately 5% return. Similarly, if a stock is trading at 40 times earnings, you divide 1 by 40 and it gives you 2.5% return. So that means you may be paying quite a significant amount for that stock. Why? Because you might be able to get, in terms of bonds, close to 1% return from a government bond. So you might think to yourself, it's too much risk that I'm taking when I'm just going to get 2.5% when I can get 1% in something else. Especially that I don't know how the next quarter is going to come out, or the next 6 months, or the next year. Having said that, there are many companies that at this moment in time have not returned to their highs, and there could be good reasons for that, but there seems to be a very large discrepancy between high-flying tech names, which may or may not be justifiably priced, versus small caps. Small caps appear to be trading in an absolute bargain basement. What makes me say that is that if you look at the Russell 2000, and you can see that thereabouts since the last 3-4 years, the return on the Russell 2000, which tracks 2,000 of smallest companies, is approximately 5%. So in the past pretty much 4 years, if you've been a small cap investor, your return has been about 5% on average. Whereas if you're investing in high-flying large cap names in tech, your return is possibly higher than 30%. Now, what does this mean for right now for the investor today? Because that's what's happened in the past, and that's great, but you as an investor in today's market, you care about what's going to happen ahead. So, in answer, is today a good time to invest? You should not be trying to time the market. You should be trying to spend time invested in the market, buying strong companies that are not crazily expensive, and participate in the earnings power growth of that company. So, the company is growing its earnings, its intrinsic value is growing over time, and you as an investor are participating in a portion of that earning power growth over time. Now, you should not be trying to figure out what the market is going to do over the next 12 months or 18 months. That is very, very challenging. It's close to impossible. You may get lucky, you may not. But over time, over the next 2 or 3 years, there's a very high percentage chance that the market is going to be higher than it is today. And if you look 5 years out, it's pretty much a certainty that the market is going to be higher than it is right now. So you should not try to time the market thinking what it's going to do the next 90 days, or the next 12 months, or the next 18 months. You should think, I'm investing in this business, and I'm looking for it to solidify its presence, become stronger over the next 5 years. That's a much easier game to play, but not many people are interested in playing that game because everybody's trying to get rich quick. If you say to yourself, I just want to follow a similar path to what Warren did, which is over time to compound my wealth, and you keep investing your savings, so every month, without question, you put a bit of your savings towards businesses, it truly does snowball over time. So in answer, is now a good time to invest? Yes, it is a good time to invest, but don't try to beat the market or to do a very strong return over the next 12 months or 18 months. Think over the next 3 years. That's the type of mindset you need to have as a business owner. You should invest. It's a very strong time to invest. It's a very good time for you to profit in businesses, but do not try to market time. I hope you found this video useful. I'll see you next time.